Tuesday, May 13th, 2025. Hope your day is going fabulous. Before we get on into this, do me a favor, hit the like button, subscribe to the channel, leave a comment in the comment section, all for the algorithm. But let's go ahead and dive on into this chart from Alpha Fractal being posted by Zhao Wedson. I've shared his stuff before. Good stuff. And what is this chart? It's a chart that I really, really hope to be true. It's a chart that I do not believe is true, but I hope to be true. And are we on track? It's one of those things, guys, where I'm going to share some thoughts at the end of this video as to I'm in the early stages. We're right there of my entire thesis for this cycle needing to shift based off of not what I'm seeing in crypto, but what I'm seeing in the stock market. And so what do we see here? We see the blue half circle, half oval, the 4-year cycle, and then shorter term cycles within the 4-year cycle. And we see a consistent peak towards the end of the larger bluer half oval, and then a bottoming out at a pretty uncanny moment, which, okay, you're seeing essentially the end of the blue circle being the bottoming out period, and close to the end of the blue circle being the topping out period. So a peak and then about a year of pain. And so what would that give us for a peak in 2025? It would give us a peak sometime between October 12th and 16th and a bottom in October 14th through 26th. That would be amazing. That actually is more exciting to me than this idea that Bitcoin is in a new paradigm and it's going to break the cycle to the upside. It eventually will. But if this is the game plan again, then okay, you know what? We're going to buy Bitcoin on October 14th through October 4th through 14th of 2026, and we're going to hold it. Now, do I believe this? Again, I don't. I've been of this theory, this hypothesis that the 4-year halving cycle is just a thing that monitors, that goes along with monetary policy. What we're seeing with Bitcoin right now is perhaps some evidence that no, actually, I need to be giving the 4-year halving cycle a lot more credit with Bitcoin. Now, I want to be clear about this. I mean, look where altcoins are. I would not say this is true. I would say altcoins are following the 4-year, not the 4-year, just money flow in Bitcoin maybe is following the actual 4-year halving cycle. But it's really interesting, the split between Bitcoin and altcoins right now, which is not typical of post-halving years. So something to pay attention to. Let's see what Zhao Wedson says here. The Bitcoin cycle remains intact and is likely to peak in October, but expect major volatility before that. Sure. I'm one of the few who speaks openly about this, but I've seen many posts claiming that Bitcoin's predictable cycle has ended due to the rise of institutions, ETFs, and other market shifts. So Zhao Wedson he's making a bold claim here, and I respect it a lot. He's making a claim that no, we are going to peak in October 2025, and we are going to bottom in October 2026. So I have been on record saying I'm not one of those people who thinks we're going to peak in October of 2025, and also that we're not going to bottom in October 2026. There are many people who are saying we're going to peak in October 2025, November 2025, but then who also think that we're going to go much higher after that with Bitcoin at least. So I'm just really fascinated to see, but stay tuned for perhaps a shift in perspective. But let's moving on. Bitcoin HODL waves. I've talked about HODL waves before. This is a thing that seems counterintuitive. I know I talked about it very recently, but here's what happens when the HODL waves go down. You would expect as hodlers are dumping their supply for the price to not be going up, but that's exactly what happened. That's something that we want to see, is that there is so much pressure on long-term holders that they would feel the need to sell some of their supply. I've already expressed to you my opinion on when I would be willing to sell my Bitcoin, because I bought a lot close to the bottom of the bear market, and I already had some before, and I have not sold a dime yet. What would it take for me to sell my Bitcoin? It's a price over $200,000. I'm not saying I would even sell it at $200,000. I'm saying that price in this cycle is over $200,000. And the longer that timeline goes, the higher the price goes, the higher my floor goes. So as the price rises, the pressure increases for long-term holders to realize their profits, which would make sense as to why it goes down. So what are we seeing now? I mean, we're not really seeing much of anything now, except, there was this interesting gully recently, and okay, there was some heavy, moderate, minimal, really, taking of profits from long-term holders, and now it does seem like we're trending up, which would equate to the possibility of a peak not being a local top, even not being anytime soon. But you're seeing a lot more conviction from long-term holders from Bitcoin, which may cause a supply shock, but let's move on. Next three charts here have to do with altcoins. And are we at the beginning? We're at the beginning of something for sure. But are we at the beginning of alt season? I do not believe the alt season. If there is one alt season every cycle, I do not believe that this is the beginning of alt season, of the alt season. I could see this being the beginning of an altcoin movement where altcoins outperform Bitcoin for a season. And you can see that. Playing itself out here. We have the orange line being Bitcoin's dominance continuing to go down. Last I saw, it got down under 62.5%, and it's continuing to go down. You see USDT dominance. USDT and USDC, this green line here, continue to go down. That's a good sign. And then others dominant, so others being every crypto between 11 and 150 in ranking, seeing a nice spike up. And if you are a holder of a so-called others cryptocurrency, I'm sure that you've been able to see over the last couple of weeks here a nice move up in your altcoins, in those particular altcoins. So is it altcoin season? Let's take a look at some other charts here. We have from Swissblock. Swissblock, they say the first leg of alt season is incoming. Last time we got this confirmation was February and November of 2024. And what do we see? We see the alt impulse. Alt impulse is this blue line here, and quite a spike. You compare that even with February and November, and it's like we didn't quite see that aggressive of a spike in February and November. So is what we have coming, what we have right now, something more significant than February and November? We're going to have to wait and see. The thing that was appealing about February and November is that it was drawn out a little bit longer. It took a little bit of time to play itself out so we could enjoy a few weeks of excitement with our altcoin holdings. This indicator for recently, it's just a straight line up. And so we'll see where we go from here. But very interesting right now. The question that I want to know is, I am tending to think it's more like November right now. November, we saw Bitcoin dominance drop like 8 or 9%. I don't remember the exact percentage. So would we see something like that, or would we see something more significant? Of course, I'm going to cheer for a more significant move in altcoins, but my mentality is no, it's going to be more like November. So we can see here, same deal from the blockchain backer. He did recently make a video talking about this, just breadth. It's a word that I use often. It's a word that he uses often, breadth in the crypto market. And so from the blockchain backer here, the 1-day time frame breadth indicator just flipped to the on position. It doesn't give insight into short-term momentum or if prices will correct sideways for the weeks ahead. But what it has done over the past 5+ years is confirm the bottom being in, including last September. And so you can see the arrow that he's pointed at here. It's actually, as of today, this is a couple days old, this post. As of today, it's actually spiked up a decent amount more. So we're seeing breadth. We're seeing altcoin movements. Here's the deal. Here's the thing that he said in his video I did watch a couple hours ago. He said the big thing, right? It's the bottom is in. That 74K bottom in Bitcoin, that is in. Now, what we're seeing right now, where do we go from here? Well, it's post bottom life. So does this precede a big move up like what we saw in the past? Or does it precede a chop? Like, we can see an example here of more of a chop. I tend to think it would proceed to move up, but we will see. We shall see. But that's all I have for crypto in this video. Let's take a look at some other investment related things here. So S&P 500 after the VIX falls for 5 straight weeks, which is what we are experiencing right now, with a total decline exceeding 10, which is certainly much more than what we're seeing right now. So the VIX fell 5 straight weeks with a total decline exceeding 10. Here's how the S&P performed after similar setups. And you can see every time, 6 months, 9 months, a year later, the S&P 500 has been up every time. So we're seeing 2016, 2016, 2019, 2020, 2020. So I'm surprised it's not, there's not any examples from earlier, but there we go. Things have gotten a lot more volatile over the last several years, especially you can see post 2008 with the introduction of QE, just injecting more of that heroin, upping the dosage of the heroin. So those 5 examples, every time a year later, the stock market has been up. Will this time be different? In the past, I've said yes. Let me share more thoughts and we'll get to that. So we are not out of the woods. In today's we are not entirely out of the woods content. Banks currently holding almost $500 billion in unrealized losses on securities. This is still a big deal. Okay, this still matters. I made some content back during in 2023, the Silicon Valley Bank collapse. And what I was able to see is that, the Federal Reserve, they told these banks just, acquire these bonds, acquire these treasuries at these super low rates, and don't worry about it. Transitory inflation, don't worry about it. You're not going to be underwater. You're not going to be underwater on these, you're going to have these unrealized losses. And then what happens? Silicon Valley Bank collapses. A bunch of other banks collapse because they're drowning. They're drowning in their losses. And some of those losses go from unrealized to realized. Or I guess, for a bank that goes bankrupt, all their losses go from unrealized to realized. This is not good. This is not normal. And what these banks need, what they're harping on, preying on, is for rates to come back down so that their unrealized losses diminish. But, Samantha LeDuc. Sadly, today's gap up in markets won't fix this. Per FDIC, the banking sector is currently holding almost $500 billion in unrealized losses on investment securities. In a stagflation scenario, the risk that rates will be higher for longer and credit losses will begin to accumulate, in particular for lenders to tech, growth, and VC, where borrowers are characterized by having no earnings and low coverage rates. This is a problem. How does this get solved? Can we ride this out the rest of the year with crypto at least, with stocks? But what happens after that? Is this 1998 or 1999? That's the question I'm asking. If it's 1998, great, we have a little bit more time. If it's 1999, oh boy. Okay, moving on. In today's communism and socialism are garbage. And shame on you if you believe in any of that garbage. This chart, my goodness. Amazing chart. Venezuela used to be wealthier than Poland. Poland introduced capitalism and free market principles. Venezuela followed socialism. So let's see Venezuela here. Okay, 1998. Venezuela looking good. And then kerplunk. Poland introducing what? A free market? And capitalism, look at Poland. GDP per capita just continuing to rise and rise and rise. Estonia, same deal. Rise and rise and rise. Argentina, maybe now Argentina is going to recover, because even though I'm still upset about that Libra coin, Javier Milei has done a fantastic job trying to get them out of socialism. All right, enough of that. Let's moving on. Another chart that may interest only me. This was actually really shocking to me. So, we don't innovate, we don't develop in the United States. What's what? Public from scratch U.S. and EU companies less than 50 years old with $10 billion market cap. Wow. I just would have never even really thought about it, But All right, Michael Arouette, this chart makes me laugh each time I see it. Europe is on its way to become irrelevant. You're right. He's got some rhetoric here, but and an open air museum with good food. But hey, let's see what we can regulate next. So you see lots and lots of big players here, including the Magnificent Seven. Are there any of the Magnificent Seven that weren't created in the last 15 years? I don't think so. Yeah, no, 50 years. I mean, Apple being the oldest, Microsoft being the second oldest, the rest of them, are all 90s or newer, I believe. That's pretty crazy. So wild. We're doing quite all right in the United States. And funny chart here. Not that I agree with this, but okay. I noticed this in the comment section. 2030 Tesla. Okay, let's slow down a little bit. Let's slow it down a little bit. Here's another one. What's this? BYD. I don't know what BYD is. But okay, moving on. U.S. recession in 2025. 39% chance according to Polymarket in late April, early May. That was actually closer to a 70% chance. And we've seen news that, is Trump winning the trade war? There's somebody who I pay attention to, Pentoshi, who I don't even think he lives in the United States. I don't know where he's from, but he's kind of made some comments. You guys actually thought that the United States wasn't going to win the trade war? Which if you're in a different country and you hear Americans talking about the United States, I want you to know most of us have pretty low national esteem. And so if you hear us talking negatively about the United States, it's we're a little bit skewed. We're a little bit biased against us. So what does that have to do with this? That has to do with the trade war. But a recession in 2025, this is the thing I want to focus on as I'm trying to consider what the rest of this year is going to look like. Because we're at a very, very key point with the S&P 500, with the Dow Jones, and with the NASDAQ. And I want to show you what I'm looking at here because the 200-day moving average is very significant. It is a significant historical indicator. And if you were to go back to 1999, 2000, 2001, or you were to go back to 2008, 2009, what you would see is a series of rejections off of the 200-day moving average. And here we are above the 200-day moving average. But the other thing that you would see is a couple of bull traps, where we've had moments where we've broken out above the 200-day moving average, but then eventually we've fallen right back down. So the longer amount of time, the more amount of time that we spend above this 200-day moving average, the more I'm going to be of a mindset that, no, we are not actually going to enter a recession in 2025. That's amazing to me. This will be the first time this century, really ever, that we would have this massive hiking cycle, and then we would have a cutting of rates, and then the stock market we would not go into a recession. So the 90s, there's only two examples, 1995 and 1998, where we started cutting rates and then stopped. And the stopping of cutting rates is what was really intriguing to me looking historically, because that's when we had the roaring 90s, is when we stopped cutting rates. And so people really, really wanting rate cuts. Are you sure? Be careful what you wish for, because we may be in this period of time where the rates stay elevated and the stock market recovers for, I would guess, another year and a half, something like that, if this is not a bull trap. So it's really fascinating to me, guys. I don't know if I can emphasize this. I am right now faced with the possibility that I'm going to have to deviate from, here's the NASDAQ, from a 3-year working hypothesis. And I'm ecstatic to do it, by the way. So NASDAQ above the 200-day. Now, Dow Jones. We're right there. So we're not out of the woods yet. But I'm making this on Monday, May 12th, by the way. Let's move on to Bitcoin. Bitcoin at the moment I'm making this video is $102,830. Not something at all to be panicking about. Some people in my live stream are panicking. Really? Come on. There's plenty of room for us to form a higher low here. I don't think we're going to go all that much down. The big thing that I'm paying attention to is this Bollinger Band. I wouldn't be surprised a few days from now. The Bollinger Band, middle Bollinger Band was at like 101 and we bottomed out there. I don't know. We can go a lot lower. We can go to the 90s and still maintain bullish structure. So this is not something to sweat about. Another thing to pay attention to, USDT dominance. This is a multi-year trend line, and you can see, a little bit of a fight trying to break through that. There's the 200-day. There's this multi-year trend line. Would love to see us continue this downtrend. I mean, looks. Wouldn't see why not. And then from there, it's pretty much a straight line down to 3.79%. Which marked the bottoms in 2024, both bottoms in 2024. So we are fun times. That's all I have for today, friends. That's all I have for today. So I hope you have a wonderful day, a wonderful rest of your week, and I will most certainly be seeing you in another video. Peace.